Good evening and welcome everyone. This is the sixth in the series of the webinars that we have been conducting over last, I think, more than 1.5 years. Indeed, a pleasure and a privilege to host all of you on a different topics. And the topic has been ranged from financial market, the economics, and today something different, which is more on the unlocking of supply chain, India post-pandemic. So before I go and double click on the topic, a couple of things to really acknowledge from my side, and of course I'll briefly talk about Almus and Refintiv. One thing for sure, as I said, this is the sixth in the series of the webinar. Your participation, your enthusiasm has really encouraged us over time to keep coming out with the webinar. And it has been an endeavor on the part of the Almus team and the Refintiv team to really host this webinar. All credit goes to you and your enthusiastic participation. So thank you all once again for taking your time out of your busy schedule, being here present wherever you are. Indeed, welcome once again. A brief about Almus. Almus is a specialized risk consulting firm. We specialize in managing 3 key financial risks for the corporate clients, namely currency, commodities, and interest rate risk. And the clientele span across different industries. Any and every companies, firms that has an exposure on currency, commodity, or interest rates take services from us. And at Almus, our wide range of services includes the advisory, wherein we consult and advise the clients, the consulting, which is more of a framing the risk management policy, the SOPs, and the third category, which is an outsourced, and that's a complete solution that includes the front office, the mid office, and the back office. So we are into the 10th year, and indeed fortunate to have clients across the industry, across the size. About Refintiv, Refintiv is a London Stock Exchange group business. It's one of the world's largest provider of financial markets data and infrastructure, enabling customers to execute critical investing, trading, and risk decisions with confidence. As the dynamics of the world economy change, the role of the central bank is also evolving. The new tools and technology are changing the way financial markets operate today. Now, keeping the requirements of both the central bank and the financial markets in particular, Refintiv has developed the holistic central bank proposition that includes products, services covering a broad spectrum. And we are fortunate to have a partnership in this entire webinar series. Now, let me come to today's topic. The topic is unlocking the supply chain, India post-pandemic. Now, very frankly, I am a student of, okay, I missed introducing myself. By the way, I'm the co-founder and the CEO of Almus Risk Consulting. And we are, yes, my apology for not introducing my own self. So let me tell you that as a student of economic and finance, never ever in my entire career, in my entire experience, I would have talked about or even paid any attention to the word supply chain. While as a finance, as a CFO, as a critical function, you will always have an integrated approach to the business, but never in the depth that it has consumed over the last 2 years. And if you look at it, I think the supply chain, the number of times probably it has been Googled or researched has been really increasing multifold, especially on the 2 occasions. One post-COVID, we have seen, all of us have experienced it, different businesses have experienced. I think the world at large has gone through a major disruption, both on the supply chain, that is a supply side, and also on the demand side. 2 years fast forward in the 2022, almost 2.5 years, we are faced with another unpredictable crisis, which is more of a geopolitical, Russia-Ukraine crisis. And even that also has really opened up a major critical, the weakness of the major critical function within the entire business. And suddenly the world is looking at now the supply chain related prices, the inflationary impact of the supply chain issues, the host of other issues, and that's really the topic of the discussion, probably across the boardroom. And maybe earlier boardroom days, one would talk about the strategy, the vision, mission, 5 years hence, 10 years hence. Now we are talking about one of the issue which is probably so functional specific, but now suddenly has gained the strategic attention. So that's where we are. And today, to deliberate on that, we have two stalwarts, two experts from two different fields. And I'm the privileged to sit in the front, in the middle of those two experts, and probably putting across certain questions to gain their insights into this topic. So let me introduce the two speakers who today we have with us, and thanks both of you for really sparing your time and joining us today. Let me introduce the first speaker, Mr. T.R. Suresh. He is the managing partner, July Ventures. Mr. Suresh is a finance professional with over 30 plus years of experience across financial services, hospitality and travel, IT and ITES industries. He is a founder of a boutique corporate finance and SME financial advisory firm, Tatva Capital. He currently is the managing partner at July Ventures, which is an early age SEBI approved venture capital fund. So something about July Ventures, it's a company, it's a SEBI approved venture capital fund established in 2018. It's a sector agnostic fund in B2B and consumer tech sectors. The venture itself is quite uniquely positioned. It offers and brings on table collectively the expansive experience as VC fund managers, as angel investors, as entrepreneurs, and also as senior executives in global business. So thank you once again, and Suresh, welcome to today's webinar.
Thank you, Maulik. Thank you for that introduction. Yes, it's a pleasure for us to be also part of this particular discussion, and look forward to exchanging views on this along with Sanket in terms of the current status of the supply chain and what is likely to happen in this particular space. Of course, it's our view and our thought process. Happy to deliberate on that.
Thank you so much. Thanks. And let me introduce another speaker, Sanket Gandhi, who is the CEO of HG Private Limited. This is a company which is specialized in aroma chemical. The company has a long legacy, close to about 129 years, Sanket. I read that, came across in the website, almost more than 100 years somewhere. Yeah, and I mean, he is a young, dynamic
yes,
CEO.
Yes, that is correct.
Yeah, and driving the company. Background about Sanket: he has completed his post-graduation in MS Finance from University of Tampa, USA, and MBA in Entrepreneurship from Nirbhar University, Ahmedabad. Having been in the chemical industry for the past 8 years, he currently heads manufacturing and trading unit in synthetic aroma industry. And HG were among the top 100 best performing companies in India in the MSME sector. And it was also awarded the same by Ministry of Commerce. So indeed a privilege, Sanket, to have you here with us this evening.
Thank you.
Sanket, Suresh, are you able to hear me?
Yes,
Thank you very
I'm
much.
able to hear.
Yes, sorry, Sanket, we missed you in between.
Yes, your voice was breaking in between, but I think I can hear you now.
Okay, all right. So great. So Suresh and Sanket, the way we'll go. So just for everyone, one piece of information, Sankara was supposed to join us. He had a family emergency, and there is a last moment change where he is not able to attend and speak at this webinar. So that's last moment change, and we have Suresh and Sanket. We will deliberate on that on the topic, and so let's go and let me share, especially to all the participants, couple of things. In the next about 40-45 minutes, we will deliberate on the topic. We will have Sanket, Suresh share their opening remarks, and then we'll have a flow of questions. Now, at any point in time, you have any questions related to the business, to the topic, to any other thing which is on unlocking the supply chain, feel free to put it up on your chat box. We will pick that up and put it up to the speakers. We definitely have a focused Q&A session in the end, but do not hesitate to put across your questions even during the webinar. So that's the flow. And let me begin with Suresh and then maybe Sanket to share your opening remarks. Number of things changing, the industry, the business, the entire market is becoming more dynamic. What's your sense, and share your opening remarks?
Sure. Yeah. You're right, Maulik. I think the last 2 years, the pandemic situation has actually brought forward what, as you said earlier, that people generally had not heard of supply chain, right? Supply chain is something which is critical for every element of our lives. Okay, so I think, and in a global market situation, right? Any challenge or any impact to any part of the global market, right, has a significant impact on supply chain in our own lives. So, for example, the fact that you had to sort of wait for the vegetable vendor to come and deliver material at your house, right? Or the government had to provide during the pandemic. That itself, you can understand the importance of what supply chain is all about, right? Because if that supply chain had not been managed by the government, and I don't think it would have been probably, any one of us would have been in a situation to sort of, will be absolutely bereft of our, the vegetables and the food that we had during the pandemic time, right? So it's extremely critical, and what it obviously the pandemic taught us is that whether you are, I mean, it doesn't really matter in which business, in which industry you are in, right? It is important that you make sure that you have the materials that is required for your resources. Let me not just say materials. You have the resources at the right time available to you to be able to manufacture, create, whatever, whether it is a product or whether it is a service, right? And make sure also to have that delivered to your customer, right? It could be a B2B customer, a B2C customer, it doesn't really matter. So this entire chain of getting the inputs to to yourself to be, and then deliver the outputs to your end customer, this entire chain is the supply chain. Okay. While yes, earlier, people used to talk about manufacturing to be the core. I would think it's now become a sort of an intermediary process, because the end-to-end pieces are most important, because the manufacturing doesn't happen if your inputs are not there. Your customer doesn't get the output if you don't have a supply chain, right? So management of this particular supply chain is therefore critical, and and that's, I guess, the reason why not just, as I said, I mean, I think from the individual, the smallest unit in the economy, which is the family, right, to the collective units, being the government, every one of them has been impacted very badly during the pandemic, and therefore, I guess everybody's focus has been in terms of making sure that this supply chain is managed effectively, efficiently, and in a cost-effective manner. And that is what we have learned, right, in terms of the effective. So where is the question of effective management of this? I'll probably ask Sanket to talk more about it, because he himself is in the manufacturing and in the trading space, right? And he understands this particular aspect critical. But before that, I would want to just point out and maybe say that going forward, this efficient, effective management will need, or rather, the situation in the global markets has created the need for having diversified sets or diversified chains of supply, right? And therefore, I think enterprises, whether they are large enterprises, medium enterprises, small or even micro enterprises, I think every one of these enterprises have to have a significant focus going forward, and ensure that there is multiple supply chains operating, so that you are sort of insured or protected against such disruptions going forward. Sanket, I guess you being in this space would have probably been affected pretty much during these last 2.5 years.
You are correct, Mr. Suresh. You're correct that this has been the talk in most of the meetings that we have internally. We as manufacturers always used to focus on the manufacturing side, on the R&D side, and how can we deliver our products better, in a better quality to our clients. We always took the supply chain side taken for granted, and we never used to focus on those areas till now. And what you beautifully put is that we sit right in between the supply chain from our raw materials to the supply chain to our
I guess he's experiencing some
Yeah, so
network
Sanket, I think
issues.
his voice is not clear. Yeah, Sanket, I think there was some bit of a net connectivity issue. We couldn't hear you.
Will you hear me now?
We can hear you now. Yes. I think there's some net connectivity.
Yes, I think I got locked out. Yeah. So as I was saying that Mr. Beju had. Hello, can you hear me?
We can hear you.
Yes. So Mr. Suresh had beautifully put in that we sit right in between the manufacturing process, sits right in between two supply chain managements. First one is trying to acquire the raw materials and then send the finished product to our clients. And we are facing the issue of supply chain management from both the sides. First, in trying to get and acquire the raw materials on time, so that the manufacturing processes can happen in the most smooth way, and also to supply the finished product to our clients. In today's time, when you're manufacturing a product where the product is a very low value product, the freight charges and the shipping costs that is happening today, and the rise in the shipping costs plays a very valuable role for us in terms of quoting to our clients the final product. Hello?
Yes, we can hear you, Sanket. Suresh, I think both of us are audible, right?
Yeah, he's not audible. Sorry, Sanket, I think we lost you. Go ahead.
Mr. Shah, can you hear me?
Now I can. The connectivity is on and off, Sanket.
I think if he switches off his video, maybe he will be able to.
Say something, Sanket. Sanket, you want to switch off the video and then speak, and that's fine. Okay, so till Sanket comes in, Suresh, something that I wanted to always, I was very keen first, while I wanted to pick your thoughts on your core function of investment into number of portfolio companies, and I wanted to definitely come to having one more criteria to evaluate the business, but that's probably at stage 2. Let me first understand, going back, like whether it is COVID related or now Russia-Ukraine related, the geopolitical crisis leading, what exactly is the supply chain issue? I mean, where is the real bottleneck? I mean, why we are into this situation? If you can give us some insights.
So, see, I think the reason why we are in this sort of a situation, or rather, at least the focus is moved towards putting together an effective supply chain as I said, whether it's enterprises or whether it's the government itself, has been, see, the in the past few years, right, globalization has meant that the work or it's also been the concentration of certain deliverables, or say whether it is work or product or materials, right, in some places, right, and therefore the dependence of people, of enterprises, of governments on those particular geographic concentrations has actually created this issue, right? While most of the larger corporations, right, most of the larger corporations would have had some redundant supply chain pieces in place, right? Many of the mid-sized and the small-sized enterprises would not have even thought about it, right? A lot of it is because it's also driven, particularly in the mid-sized and the small side, it's also driven by the pricing, right? And therefore, if you have a geographic concentration of something, right, you expect that you will be able to get a better price out of it because there's a lot more competition in that geography, and therefore that benefits you as the mid-sized or the small-sized enterprises. But that is probably driven the entire the supply chain problem per se, right? And to a large extent, if you now see what is getting done here in India, right, is to ensure that you get out of that particular problematic issue of having to be dependent upon some particular geography, right? And therefore, I mean, one of the reasons why we have the Atma Nirbhar program is for this to say that, listen, hey, you need to be able to provide for yourself, right? And to a large extent, if you provide for yourself, then I think you're good for it. Okay.
So I have a related point. Sorry to intervene, but the
Please
point
do.
is mentioned about the Atmanirbhar thing. See, like you started off by saying that it was a globalized world. You had a pocket of units specialized in manufacturing. Some other different countries specialize in maybe different kind of services and activities. Now, with all of these issues over last 2 to 3 years, and like you talked about an Atmanirbhar, are we really looking at a deglobalized world which has its own pros and cons? I mean, one of the things that really the world benefited on globalization was completely a disinflationary scenario. We never had an inflation. Now we're dealing with inflation, we are dealing with deglobalization. So just your thoughts on that.
Oh, so I don't believe that deglobalization will happen, right? Primarily because I think, see, the fact of the matter is the resources are dispersed across the world. Okay, like say for example, our own case, we don't produce enough and more of crude for us to take care of ourselves. So we can never become Atmanirbhar, right? Particularly from a crude perspective, right? Because it is concentrated in certain areas and it's a natural resource, and therefore you can't do anything about it. So you can't really. So I don't think a deglobalization will sort of happen. But what will happen is alternate sources for the same resource or material or everything that will get developed, right? So effectively, what it will mean is that you will have multiple supply chains for the same piece, right? So like say India, right? While we will continue to say, I'm just taking the example of crude, right? While we'll continue to keep buying crude from the open market, right? But we will also try to keep doing these deals that we are trying to do with Russia and Iran to try and see if we can do, get our supply confirmed supply to ourselves, right? while we will continue to keep obviously picking up crude from other countries as well, right?
Sure.
So my view is that you will have to have multiple supply chains operating for yourself to be able to go forward, right? What does that mean? You talked about inflation. It's definitely going to increase the prices because if in any particular change, because this is a change, this is definitely a change that is happening, and any change, there is a cost associated to the change, right?
Sure.
So when you keep setting up multiple supply chains, right, what happens is you obviously are going to be
Increase the cost of the overall.
Exactly, because it's a redundant piece, right?
Yeah.
You will, and redundancy means that you have to bear that extra cost.
Yep.
In the long run, it will sort of settle down. In the long run, it will sort of even out. But yes, initial cost has to be incurred, and to which I think particularly the medium and small segment, right, of the industry, right, they have to recognize it and provide for that, and that is very important.
There is a related question here, Suresh. Before I ask that, Sanket just wanted to check with you. Are you back? Am I audible to you?
Yes. I have switched off my video. I think there's some network issues. I've switched off the video so that at least I'm audible right now.
Okay, so I think still your voice is coming.
Can you hear me?
Not able to hear you clearly. Can't hear you, Sanket. In the meantime, let me continue with Suresh. So Suresh, one related point, and this is one of the most debated topic in the financial market. Is inflation here to stay, or is it in transitory? Something that you mentioned that, initial phase you will see. Yeah, initial period you will see inflation inching up because you will keep padding up. I can't hear you. Sanket, we are unable to hear you. Yeah, back to you, Suresh. See, the question is on inflation. What do we expect? Is it a transitory? And this is more from a business. I mean, not as an economist, because there are economists debating about it, but just your insights into this area.
Oh, so see, I think it's a function of the supply. See, it's primarily the current inflationary trends is obviously a function of the monies that got pumped in into the system, right? Into the economies by the governments. Okay, so therefore, too much money chasing too little products, right? So therefore, it's absolutely clear that inflationary pressures will come in, right? See, the transitionary, is it transitionary? It may be transitionary, it may be something for some economies, but it could be permanent or it could be difficult for a lot of other economies, right? So again, it's a function of, how well your economy is capable in terms of continuing to keep generating enough and more demand and making sure that you have enough and more supply, right? So again, we come back to the same supply management, right? Supply chain. Because too much of demand, obviously, again, will keep pushing the prices up, right? Thankfully, India is, obviously, it's got a very vibrant domestic economy, right? With 130 million, sort of 100 or closely coming close to, I think, 140 million people, right? And a target of reaching a $5 trillion sort of GDP economy, right? The expectation is that there will be, while there will be intermediary or transient inflation, as you put it, the expectation is obviously the supply will make sure that the inflationary impact is lower. Okay, for which I guess many of these programs that we are seeing, right, and the sort of spend that the government has put out, at least in the latest budget with respect to the infrastructure spend that they have put out, is basically to build or create that supply, create that capacity within the country to be able to address the demand requirements, and hopefully we will be in a position to control inflation. Is it something which can be, can we continue to keep having a sort of a very controlled inflation piece? I would not think it's possible, at least in an economy like ours, at least in this stage that we are, because any place where you see that the inflationary trends are sort of flattened out, the economy to a large extent is also flattened out in those areas, right? The GDP growth, if you see, is hardly the 2-3%, 1% type of pieces, right? So from that perspective, yeah, I do think India as a country is better placed that way.
Got it, got it. Let me switch gears and come to some different topic, of course, though partly related to your business and wanted your insights. But before that, let me again check with Sanket. Are you in, Sanket? Are you able to hear us? I'm very, very keen to hear your insights into the real life business. Both me and Suresh come from a finance side. It's a industry which we love. We will talk about it. We can spend an hour, but really keen to hear the businessmen talking. So are you there, Sanket? Yes, I think some silver line. Say something, Sanket. Yeah, I think you switched your gadget. Say something so that we can test whether you are there or not there. Okay, it's connecting. So Suresh, yeah, here we go. Sanket, I think you are connected now.
Yes. So, so as I said, I switched off video. So
no, you can now switch on video also because your voice is very clear. And I was just chatting. No, okay. Our instructor says don't switch on. Okay, so don't switch on. But I was just chatting with Suresh that we both are from finance, and I was so keen to hear the businessmen talking on the real issue. So we were very, very desperate to have you back. I'm glad that you are. So please say something and give us your insights. What is happening on the real life front?
So for us as a manufacturing, as I was mentioning, it has been a real challenge tackling with the supply chain crisis that is happening right now. It is happening from both the sides, from procuring the raw materials, also to giving our clients the finished product. Now, when we talk of the product that we manufacture, it's a low value product. It's a $2 product, and the freight prices till now did not make a huge difference to us. With the freight prices going tenfold, this has become a major portion of the entire cost that is given to the client. Right now, the freights, which were earlier around $1,500 from India to US, has jumped up to almost $17,000.
Wow!
So that's more than 10 times, and this cost is almost around $1 for a $2 product. So these kind of issues have raised another problem for us, which is the working capital. So now you're doing the same amount of work with almost 30% more working capital.
Wow. Wow.
The other issue that we are facing regarding working capital is that most of the shipping lines, what has happened is that they have started giving us reduced amount of free days. So from 14 days, which were free days, they have reduced it to 7 days. They are trying to do this so that the empty containers that is sitting at different countries can be shipped out to countries where there are requirements of empty containers. In doing so, what has happened is that in countries like US, most of the clients or the importers have started uh, clearing the cargo faster than they could, and this has created another issue for the US importers, for the drivers and truckers. All these problems have joined in. Again, for us as an exporter, we ship out our products well in advance so that the shipping lines can accept the goods on time. There's no delay from our side. All these things increase our working capital as well.
Yeah, yeah, got
So
you.
we're not only battling from the supply chain side, but we're also battling from the working capital side as well.
Sure, sure. Yeah. And Suresh, on that one, I definitely wanted to hear from you on the supply chain financing. Give me a moment. One, I have a question for Sanket. Given what you just mentioned about, it has a bigger problem on the working capital side. I mean, let me ask you a very layman, question. Will it not really make you or the company based in this part of the planet much more uncompetitive than maybe somewhere else? Because end of the day, it is like you said, 10 times increase in the freight cost.
So for India, I deal in majorly in the chemical industry, and
Yeah,
for Indian chemical manufacturers, the major competition comes from China,
sure.
and the freights in China have also been increasing.
Okay, so it's both sides there is an increase.
Exactly. What other thing has happened right now is that in the recent times, uh, uh, China had their New Year's, and China was expected to ship out most of its products post February in the beginning of March. Uh, this was anticipated by most of the shipping lines, and they had put in a lot of empty containers in China.
Okay.
So what has happened here is that now with the most recent uh, corona outbreak, most of the empty containers are sitting there in China, and right now there are lockdowns in China, which has even more delayed and even more uh,
Yeah,
strengthen the problem that is happening right now.
yeah,
In terms of competitiveness that you are saying, this has put Indian chemical manufacturers in a better position to deliver the goods. Again, there has been the cost of goods have been more than what it was pre-COVID. There is inflation taken place in most of the end products as well.
yeah.
But answering to your point is that has it affected our specific industry? We have been competitive just because China is uncompetitive due to the supply chain.
Got it, got it. It's a fair point. And maybe I think the dynamics will change from one industry to other. Wherever there are an alternate source, say from Europe or some other countries, probably there the situation may be completely different just because of
Correct,
one single element, which was probably never the focus earlier.
correct, correct.
Yeah, yeah. I think there's one interesting question, and I'm going to put it up to both of you. See whom you want to, whom you want to respond. How impactful has trades and other government initiative been on the ground level for MSME with respect to supply chain? Based on this, how big an impact is the recently announced PLI initiative expected to be when it comes to manufacturing? Suresh, you want to take up?
I can probably speak about on the financing piece that many of the some of these initiatives address, but specifically on the incentives being provided to MSMEs with the PLI incentive or anything else with regard to. I think Sanket will probably be able to give a little better understanding, because I guess he and his industry is probably being supported on that front that much more. So on those initiatives, I would want Sanket to probably talk about. On the financing part, I will
Please
definitely
go.
do that.
Please go.
Yeah. So See, on the financing part, I think there has been obviously a major realization that of the the MSME segment, and or rather, I think the biggest realization is that if we as a country need to hit a $5 trillion target GDP, right? We need the MSME segment to grow significantly. Today, it's probably contributing about 30% of our total this one. Then it needs to actually nearly double, right? Or at least 50% of our GDP has to be contributed from that area, right? And for that, there is enough and more support that they need, right? Starting and so on. Therefore, I think some of the initiatives that has been done has been basically towards ensuring that you are I mean, that particular segment, that industry segment, is benefited in terms of being able to be competitive in the market and therefore grow, right? So, for example, one, of course, while a lot of people have also sort of been saying that the GST has been it's a flawed whatever, but I think it has definitely impacted all the MSME segment for sure. They are much better off, I would think, with this one nation, one tax situation. There is a clear understanding of what would be the the freight cost and the logistics cost, right? And therefore they can include, or rather make sure that the product that they sell or the service that they provide is factors in all those particular pieces. So I think that has been a good this one. What is also the GST, I'll come to it in terms of the information that is getting captured on GST and that how that is helping on the financing part of it. I'll come to it a little later. The GEMS initiative also, I think, is a fairly good initiative. Again, trying to get small enterprises at least onto that platform so that they get an opportunity at a particular platform for them to sell to the government, and also making sure that they have or at least the transactions that they are executing on that platform is sort of recorded, and you have a audit trail of those transactions in terms of the whether it is the quality of the products or the performance of that SME in terms of being able to supply those products. So that again, that sort of information is important. Again, I'll come back to it when we talk about the actual financing part of it. The other initiative, which I think the TREDS marketplace, which is also an initiative of Reserve Bank of India, which also is a initiative which is absolutely essential, where you are able to procure financing, non-collateral based financing. I think that's important because most of the traditional banking channels or traditional channels of financing has always been collateral based, and therefore here's an opportunity for companies who don't have enough collateral to actually get their funding in place. All of this is basically, as I said, I think is facilitating collection of data, right? Which is, we come back to, and therefore I think the involvement of IT and IT in this particular area. You collect a lot of data about, GST basically gives you a sales data, your invoices that you're raising, all of that particular data that gets collected. Platforms like GEMS basically allow you to give provide information about the sort of quality of produce that you are being able to bring in. your performance in terms of just in time, or when, as and when, when the delivery, is it getting done at the right time or not, all that particular data, that is also extremely essential. What this helps is obviously gives the comfort to a financial institution, right, to say that this particular entity, right, there is enough and more data about that entity's performance for me as a financial institution to take a risk and go ahead and maybe discount his bills, right, or do a factoring pieces. To this, what has happened is there has been a new set of what we can probably call them neobanks, right, or fintech entities which are coming into play, who are facilitating, again using technology, collection of data, even more refined and more intelligent data about these enterprises. Okay, so for example, if you are a brand, and if you have your channels and distributors, right? Most of the channels and distributors, as a brand, you are only available, you only know about what you're selling to your immediate distributor. You really don't know what is the subsequent sales or whatever that is happening to a sub-distributor, or from the sub-distributor to the actual retailer, right? But there are platforms, there are fintech platforms which are facilitating that entire collection of the data in terms of finding out what is happening at the retailer level, at the sub-distributor level, at the wholesaler level, or at the super distributor level, right? What is that? How is it helping? All that data is helping the brand, right, or the what I call as the anchor brand, right, for them to actually develop certain programs along with the fintech, right, to develop programs which involve financing of those sales that are happening right up to the retailer level, right? One, it obviously is because the risk is spread across the wholesalers, the distributors, and the retailers. I'm taking an example, right? But there are many such programs that is happening. The risk is distributed, and therefore the pricing of that is very competitive, right? Second, it is short term. It's non-collateral based, right? And you are actually stepping into a whenever you are into that particular channel or in that particular chain, right? For sure that you will also get financing. So you really don't need to keep running around to say, oh, which bank, which particular NBFC that I need to do that. Okay, so those are the neobanks or the fintechs that are coming into play and who are providing this this service. And whether it is buyer-led programs, we used to see. If you recall, I think most of the larger manufacturers, right, they used to have vendor management or vendor financing programs, right? So which is whereby anybody who's supplying to, say, a Tata Motors, right, he can go and have it discounted, have his invoices discounted with a bank, which Tata Motors has sort of designated, right? Those are buyer-led programs. But now the reverse factoring is also happening, where the anchor brand-led programs is also happening, where what the anchor brand sells into the market, that is also getting financed, right? And all of this is getting financed, and that is possible because of many of these initiatives that we have talked about, in terms of what the government is trying to do. Go ahead. Sorry.
Yeah. So, and I think the other piece, the other question, let's have Sanket comment on that. But Sanket, there is one more question This was a question that I was keen to put it up, and thanks to the participants, I'll read out that question plus the earlier one. The earlier one I'll repeat once again. How big an impact is the recently announced PLI initiative expected to be when it comes to manufacturing? And I mean, all of us know government has really put down, identified 13 odd sectors for PLI. Total investment is close to about $27 billion. In addition to that, government is also working on a national logistic plan to put together an integrated approach to the development of the entire manufacturing sector, which will support the supply chain. So a lot of things are happening. Few comments on that, plus one question that has come from the participant. A business. So while I'll twist the question to make it generic and then specific to HJRO.
Sure.
General question is something that I mean, in our earlier dialogue, we spoke of the use of AL and ML in the entire supply chain. How do you see that as a relevance in general? The question is, as a business, has HROKM implemented any form of digitization, blockchain, AI in its supply chain post unlock? And it's so, if so, how beneficial has it been? So whichever way you want to address, in general, it's fine. Specific to HJ also is fine.
Sure. So to start with most of the government programs that are going on, may it be the e-way bill, the GST, most of them have become digitized.
Yeah.
Every company is, if not today, will have to go on a digitized platform in the future as well, and the government expects that as well for easy collection of data. So for us, when you ask that how do you think the entire AI or ML or maybe blockchain is going to affect your business, I think there is not enough data right now, but we need to start working on it from right now so that we have enough data to have that kind of predictive analysis where what is going to be the cost for freights in the future. For me, if you ask me, uh, we do have trend analysis, we do have our own analysis going on, trying to understand where our raw materials costing is going to be. We do analyze what is the cost today, where our raw material prices are, and where it is trending, so that our finished products, where is it going to be in the next couple of months. We have enough past data for the same thing. Based on that past data, we do analyze that what is going to be the future, what are the variables. We are completely aware of that for our raw materials. What I initially said was also that now each business is taking into consideration and discussing the freight and the shipping costs for the entire business as well. For this specific aspect, manufacturers or companies do not have enough data right now as to understand. It's difficult for everyone right now to understand what are the variables as well. What is going to affect the cost of the freights? If the freights are at X amount today, what is the trend that is going to happen 1 month down the line? Because as a manufacturer, I have to quote my clients based on the prices of today, and I'm going to ship the product 15 days, a month later. By the time I ship out the products, the freight costs have already increased. There are GRIs, there are freight increases, that is $500, $1,000 per month that has increased, and we have no data to support as to why this increase has happened. There are a lot of variables. Now what has happened is, in today's time, I think even a small manufacturer who's exporting has to take all these things into consideration. Even if he's not exporting to Ukraine or Russia, anything that's happening in Ukraine or Russia is still going to affect the freight prices. That is going to be like, if he's exporting to US or somewhere in the European sector, anything that's happening in China, the Omicron virus, the increase that has happened, the lockdowns that has happened there, those variables are going to affect his business, his end price as well. And I'm not just taking into consideration the freight prices. most of the raw materials that are imported in India, their prices have also increased. So their production and their end product, the total cost increases by a lot.
Yeah.
So all these things, I think, if you ask me, uh, shipping lines are working towards finding out and predicting which variable is going to affect how much in terms of and putting that data transparently on digital platforms as well. They are working towards it. But as of today, if you ask me, we do not have enough data to support these things.
Got it. Got it. Yeah, it's so in a way, business has been all about managing number of variables, and suddenly we have one more critical variable to manage. From the experience of the last 2.5, 3 years, we have only 5 minutes left, and before we complete, I wanted to definitely have both of you share your view about what next from here. I mean, are we really looking at is the worst behind us, and we are looking at a stability in future, or we are talking about things are here to stay, we will continue to deal with unpredictable volatile world, and it's for business to really gear up themselves and deal with it. So your thoughts on it peeping into the future?
I'll just go first, Sanket, if it's okay with you.
Sure, please go ahead.
See, I don't think that by solving for this, we're going to be solving for the future and in terms of all the problems in the future. It's not. So the variability will continue to keep happening. What we need to, I think what this has basically taught us is that you need to be, even the variables, the unknowns, you should be, trying to predict some of those unknowns and therefore be ready for being able to address that in unknowns. Okay, and I guess, and that's what that's what resilience is all about. That's what sustainability is all about, right? And that is where I think we need, as businesses, I think one, you need to be soft-footed, or what to say, fleet-footed, so that you can keep, you can change quickly, right? Be not what to say, stuck to certain pieces. You need to be able to do that. Particularly in the supply chain, these sort of disruptions will happen sometime or the other, right? I mean, and it will keep happening. So I'll give you another small example where the supply chain to a certain extent got impacted, but got nothing to do with the pandemic, nothing to do with the geopolitical piece. That ship that got stuck in the Suez Canal.
Yeah.
Correct.
That, it impacted. Of course, it impacted. Whether it was a 3-4 day, some critical supply somewhere got impacted because they were behind that particular ship. Right? Now, such situations will happen, and therefore, the businesses should be able to change itself to be able to address it quickly, right? Make sure that you have enough and more information that is available. Therefore, you have to, be what to say, participate and sort of gather as much information as is possible, relevant information for your businesses, and keep tracking those regularly. And make sure that you build your multiple supply chains to be able to address these challenges.
Great. Thank you so much, Suresh. Yes.
Thank
Sanket.
you.
Yes, I just wanted to add to Sureshji's point is that he's completely right that most of the MSMEs and most of the small sector manufacturers companies in India are very resilient. So they, with most of the problems that come in, they have been ever changing. The beauty about these small companies and medium scaled companies is that they can change really fast to any problem. They can find out those, how do we say, jugad solutions, and change very quickly. The only thing that most of the companies need to focus right now is trying to be completely aware when they are dealing in global businesses, They need to be completely aware of what's happening, where and how is it going to be affecting any part of, may it be finance, may it be any currency related risks, may it be any because today we are discussing the global uh, the global impact of the shipping. Tomorrow we'll be discussing the risk related to currencies. So most of these companies just need to be more aware, and they need to have that data available to them so that they can keep on having those decisions to change very quickly. So answering to your question, uh, will it is it going to affect? Yes, most of the companies are going to change. This is not going to be the end of all the problems. There are going to be newer problems coming in. Shipping problems, if we try to solve one problem, there's going to be another problem coming out of it, which no one expected. And most of the companies are going to find out solutions to that.
Excellent. So I think the message is very loud and clear. It is for the company to be really agile, resilient, build their own muscle, given that uncertain scenario, whether today it is a supply chain related or tomorrow it could be something else. It is important for the companies to really, build their strength to deal with anything and everything that comes up. And I think one encouraging statement from you, Sanket, that today MSME are in that space. They have been dealing with it, and they are much more stronger, powerful, to be able to absorb the shocks, and also they are well prepared. And of course, there are definitely miles to go, and this is a journey. It is like climbing the mountain. It is never rest. Always you keep climbing the new heights. But yes, indeed, it was really insightful. Both Suresh and Sanket, thank you so much for sharing your insights with us. It was really a pleasure. I picked up quite a few things out of these interactions. As I said, a student of finance, picking up some thread from supply chain and the real business experiences. So thank you so much once again. Looking forward to interact with both of you on different opportunities. So thanks, and thank you.
You. Thank you very much for having us.
Yes, thank you very much for having us. Thank you.
Bye.